Hello and welcome to another edition of Client for Life. Well, it's a very dynamic time in the industry at the moment. The RBA met earlier this week and decided to leave rates on hold as they are. There were some very interesting comments and feedback. They were saying that it's really too early for them to judge the split between home loans and investor loans. They're pretty keen to run some data to see whether it's actually slowing down what's considered an overheated investor market at the moment. I would suggest that it's probably another quarter or two till we have some realistic data on that. But the overall comments have come out that they're certainly feeling they're able to manage risk a bit better. Westpac came out recently with a 2-point increase in their mortgages. No surprise given the fact that the government's increased the amount of capital that our banks have to have on hold. I know I wrote a whole chapter on this in my book that one of the reasons that Australia withstood the GFC so well is we had massive reserves. Each bank in Australia has a mandatory reserve amount of cash that they must have, money in, money out, what's left over at the ebb and flow, probably around midnight each day. They've increased those amounts, and Westpac have basically pushed that out into the mortgage belt to help them build their reserves there. But overall, commodities are still down pretty much on a global basis, and that's reflecting in the share price. However, I had a chat with Nick this morning, and he and I both agree that what's reflected in the drop in the commodities is showing a reasonably fair pricing in the stock market. So there's nothing overheated and showing a reasonable flatlining there. Talking about property, it's far from flatlining. Medium unit price just hit $532,000 and the medium house price, I can't believe I'd ever say this, is just hit $730,000, which is quite amazing because I think in 2012 it was around about 535, 550 medium house price. So it's a very dynamic market out there at the moment. My challenge stays the same, and that is to get the best value for money for my investors. There are pockets of good value, but I'm seeing nearly every price list that's coming to my desk at the moment, be it Collingwood, Brunswick, South Melbourne, South Yarra, everything's nudging over 10,000 a square metre. And as you know, when we started Solid, we were sort of 6,500, 7,500, 8,500 square metre. Going to 9,200 was considered quite a big leap. So certainly the whole market in my neck of the woods has moved up at least $1,000 a square metre in the investor stock. So, but interestingly enough, the donut remains the best investment. And in fact, I read in one of the property magazines this week, you know, the 5 best rental return suburbs, and I had to smile because one of them was Morwell, another one was Pakenham, and yet we've busted the theory constantly, time and time again. You're not just looking for the return on your rental investment. In fact, at Solid, we remain absolutely steadfast and uncompromising. We want capital growth, we want rental return, and we also have to look at the tax benefits because it's so common to have families with one doing better than the other, and it all gets down to the structure and the return on your investment, how much cash it's taking out of your pocket and how much it's putting into your pocket. So very dynamic time here at Solid. We're settling 3 apartment blocks between Christmas, all of which we've been granted pre-settlement access up to 3 weeks earlier than the rest of the market. So that's what helps continue to strengthen our property management division and give you the return on investment. In fact, I went to one of the developers and I said, look, our clients have had a 10 out of 10 experience. They've bought a good property in a good suburb. We've got them a good mortgage. Now we need to get them a good tenant, and we need early access for you to do that. And they understand the story and they want to buy in and they want to make sure that our purchasers are really happy. So that's what keeps the wheels turning here at Solid. So I'll sign off today on a medium unit price of $532,000, medium house price of $730,000. It's a dynamic industry to be in. Take care and thanks for listening.